Good afternoon. The China Central Bank has been the largest buyer of gold in the world for the past 17 months. Their central bank increased its gold reserves to a record high in 2023 at 4.3%, which is 3 times what they were holding in 2014. And that's a percentage. Their dollar reserves have grown a lot since 2014 too, which means that their gold buying is growing much faster than their USD reserves are, which are also growing very fast. Let's also say here that these values are just good guesses on our part. China's central bank reporting is deliberately opaque, and there's usually a long time lag. China is also the biggest gold producer in the world, and we don't know how much of that production is held by their central bank, how much of their domestic production their central banks buy. We do know, however, when Chinese banks exchange US dollar for gold in international exchanges. And we know that this volume is higher than it's ever been. The question, though, is why? If gold is coming out of the ground in China every day, why are they scooping up record amounts of gold from around the world and bringing it back here? And analysts are pointing out some good reasons, good explanations for it. China does run giant surpluses in trade, over $2 billion a day, and that's all going to go somewhere. Here are some other reasons. Francisco Blanch, he's with Bank of America, says that central banks don't trust the global financial system after the sanctions on Russia froze Russia's foreign exchange reserves at other central banks. Bloomberg here says that Russia's expulsion from SWIFT is what makes international currency conversions and exchange possible, that this was a huge factor too. Let's consider another angle, which is suggested here by Axios. The BRICS countries are eyeing global economic dominance by 2050. That's not far off, and they need to lessen dependency on US dollars to do that, or de-dollarize, which is get rid of it completely. The BRICS are Brazil, Russia, India, China, and South Africa, plus a dozen or so other countries. And these countries hope to form a dominant trading bloc which is not reliant on US dollars so that they can trade with each other. And here is how China's gold buying might actually lead to that. The economic sanctions, the ambitions of BRICS, these are all important drivers of de-dollarization. But another factor is that the dollars are becoming scarce in the international banking systems. The high borrowing rate in the US is sucking US dollars out of banks across the world and sending them back home to the United States. And it's hitting some countries hard already. Here is Egypt. They're out of dollars. They need to raise $850 million in a hurry to buy wheat, probably. Here's Pakistan, where even major Western companies can't get their money out because there's no USD to exchange out. Here is Bolivia, Iraq shutting down withdrawals of USD to hold on to the few they've got. So this is getting to be a serious problem now across some of these frontier and developing world countries. The problem with the idea of de-dollarization, though, has always been this, that what are they going to replace US dollars with? A medium of exchange is needed where global players recognize the value and agree to trade based on that value. China has the second largest economy in the world, or the first, depending on how you measure it, and the Chinese RMB could theoretically replace dollars over time. Problem is the China government doesn't want that. They don't want their sovereign bonds traded in international markets outside their control. So there may never be deep pools of billions of RMB of capital abroad which can help third-party countries to trade. If China is trading with Qatar, for example, they have swap lines in RMB. But if Qatar is trading with South Africa, they're using US dollars. So Qatar, South Africa would be a third-party trade to China and to the United States. When Qatar trades with South Africa, the banker in New York or London probably would just charge the right accounts and get paid a percentage on the transaction for not really doing anything at all besides making accounting entries. But that bank does have USD on hand, which can be loaned for a few days pending product delivery and settlement. Let's suppose, though, that China wanted to do that business, the business of the bank, to serve as an international settlement bank and to be well paid just to provide the short-term funding guarantees on both sides, like the bankers do in New York and London. But they don't want to use USD. That would defeat the whole purpose of de-dollarization. And they don't want to use their own RMB, the Chinese currency. How can they do that business then? Let's take these two headlines here. One is from 18 October 2023. The second is a month later, November. China set up an RMB swap line with Argentina. They also have a $7 billion swap line agreement with Saudi Arabia. These swap lines function just fine for bilateral trade between China, Argentina for food, for example, or between China, Saudi Arabia for oil. But what if Argentina wants to sell food to Saudi Arabia or buy oil from them? Argentina needs oil, but Argentina is out of dollars, and they just cut the value of their peso by half, so the Saudis don't want Argentina's currency either. But in theory, China could make the trade go. They could use their gold reserves on the Saudi side to guarantee US dollar value of the trade, use their swap line with Argentina, instead of Argentina using the swap line to buy Chinese farm tractors, for example. They could use it to buy Saudi oil, which could be used to buy fuel for the farm equipment they buy from China. For example, this process would be clunky and messy, especially in the beginning, as bankers and traders in Beijing and in Riyadh and in Buenos Aires figure out how to smooth things out. But that's how it might work for countries that have swap lines with China, but not swap lines with each other. This would also work, in theory again, with countries that do not necessarily have swap lines. Qatar and China have swap lines, but I don't know if Chile does. But let's just take those two countries as an example, Chile and Qatar. They each do a lot of business with China, but not necessarily with each other. They could agree to use a gold exchange in Beijing to make the trade work. They would need really close, deep mutual trust with China, though again, not necessarily with each other. Were China to guarantee, using their gold deposits, that the Chilean payer can pay and that the Qatari supplier can supply, neither Chile nor Qatar would need to use US dollars to make the trade go. They could just use Chinese guarantees backed with Chinese gold. This goes without saying that this would deepen China's relationship with both Chile and Qatar, and again, allow Chinese banks to serve as a settlement bank without using USD or RMB. And there would be a lot of demand for that in a lot of countries across the world for that kind of system. We're not saying that this is China's strategy, or that this is what China is thinking, or that this is where they want to go. But this is where they could go. We'll see. Thank you. Be good.
Police in our town, the governors and kings and presidents